What's up, everybody? My name is Demetri Kofinas, and you're listening to Hidden Forces, a podcast that inspires investors, entrepreneurs, and everyday citizens to challenge consensus narratives and to learn how to think critically about the systems of power shaping our world. My guest in this episode of Hidden Forces is Stephen Findeisen, a fraud investigator who goes by the pseudonym Coffeezilla and runs an eponymous YouTube channel dedicated to exposing scams, con artists, and fraudsters. His work has been widely covered in the media, including on the BBC and Vice, and Stephen himself was recently profiled in a feature article for The New Yorker. His investigations into FTX, Tether, Digital Currency Group, and the continued fallout and contagion sparked by the collapse of Luna and other related crypto companies, hedge funds, and lending platforms is the subject of today's incredibly timely conversation. Stephen and I recorded this episode on the afternoon of Friday, November 25th, and spent the first half laying the groundwork and bringing everyone up to speed on the latest developments. In the second part of our conversation, Stephen and I do a deep dive into the crypto firm Genesis and its parent company, DCG, including the important role played by the Grayscale Bitcoin Trust in serving as collateral for much of the firm's counterparty exposure. We also devote quite a bit of time to discussing the stablecoin Tether, otherwise known by its acronym USDT, and some of the recent revelations that have come out of the FTX-Alameda bankruptcy, which point to some very suspicious and troubling connections between Sam Bankman-Fried's empire, his political relationships, and the executives and proprietors of several corporate entities based both in and outside of the Bahamas, including a U.S. federally insured bank in Washington state that has become the source of immense speculation. If you want access to that part of the conversation and you're not already subscribed to Hidden Forces, you can join our premium feed by going to hiddenforces.io/subscribe and sign up to one of our 3 content tiers. Everyone gets access to the premium feed, which you can listen to on your phone using your favorite podcast app, just like you're listening to this episode right now. If you want access to our Hidden Forces Genius community, which includes Q&A calls with guests, access to special research and analysis, in-person events, and dinners, you can learn more about that on our subscriber page. And if you still have questions, feel free to send an email to info@hiddenforces.io, and I or someone from our team will get right back to you. And with that, please enjoy this incredibly timely and revelatory conversation with my guest, Stephen Findeisen. Stephen Findeisen, welcome to Hidden Forces.
Thanks. Although I think a lot of people know me as Coffeezilla if you watch me on my YouTube channel. But yeah, that's my full name.
Yeah, your YouTube channel is, what's the word I would use? Incredibly successful, enviously successful. You have videos with millions of views each. That's an enormous level of success. So first of all, I must say congratulations. And you've also done it by doing really great work, and not just, on the stuff that we're going to talk about today, which is crypto related, but it looks like your focus seems to be on trying to track down and expose frauds on the internet. Why don't you start us off by telling us a little bit about who you are and how you got into what you do now, which is run this very successful YouTube channel.
Oh, thanks. It's very nice of you to say. I see it as a long accumulation of like 6 years of work. So to me, it feels like, I assume people look at it and they're like, wow, that looks really big. But I've been building it over 6 years, basically ever since I got out of school. And I did an engineering degree. I hated it. I did chemical engineering, graduated from Texas A&M. Didn't like it, wanted to do something else. So I started YouTube. At first, I was just covering like a wide variety of topics and I'd kind of summarize them. But I always had an inkling for fraud. I was always interested in fraud ever since my mom got cancer when I was in high school. She's fine. But I watched her kind of go down this rabbit hole of like health scams and people who wanted to sell her this dream of, basically take advantage of her, sell her colloidal silver, garlic's going to treat your cancer, all this stuff. Thank God she eventually got a surgery. But I kind of watched that. I thought, wow, that's interesting. I didn't even know what I was looking at. It's like seeing something and you don't understand what it is yet. Then in college, my interest in fraud and scams continued, but in a different vein. It started with like the get rich quick stuff because I was working for this chemical engineering degree, which, was basically sort of my plan. And I was working really hard to try to make a, pretty decent living. And people were coming to me and my friends and saying, hey, we've got a way for you to make basically overnight 6 figures just with a little bit of hard work, and you're going to be set for the rest of your life on passive income. Well, we were like, okay, what are you talking about? MLMs, multi-level marketing. You guys may know them as like Amway or ACN. It's a lot of, there's usually products, but the real product is selling to other people to sign up, right? So a bunch of my friends got into that. I watched them get into it. Some of them invited me to like the meetings. So I'd go to the meetings. I never joined them. But then I was also interested. I was like, what am I looking at here? It seems like everyone wants to be successful here. Everyone believes in the same promise of success. No one really is that successful besides the person on stage who we don't really know how successful he really is. He just says he's worth all this money. So I got interested in just sort of like the art of the con and like, how was this happening? Why were people being tricked over and over? Then I started looking into it and I was like, wait, actually, it wasn't unique to my meetings, that I would go to where most people weren't successful. If you look at multi-level marketing as a whole, the statistics are horrendous. Like 98% of people are making below minimum wage. Now, of course, they would say it's because people don't work hard enough, right? That's always the excuse of why like get rich quick schemes don't work, because you didn't put in the effort. But I was just fascinated. I was like, how do people keep falling for this? So then when I got into YouTube and I'm trying to make this YouTube thing work out of college, I kind of start revisiting some of that stuff. And there was like all these courses getting sold for $2,500, a bit of a different thing. But it was like, hey, I'll teach you, Demetri, Amazon shipping. It's so easy. Anyone can do it. Anyone can make 6 figures. You just have to know this little trick that I learned after working for 5 years. You don't have to work 5 years. You'll make 6 figures right out of the gate. All you have to do is pay me $2,500 first. So I started talking about that. I was like, this is an obvious grift. And so I started exposing these people's like true financials, et cetera. A lot of them were faking, sales. So that kind of started the channel off. And I had done a lot of stuff before that. But when I started covering fraud, there was a unique resonance that the work had that previously, I'm glazing over a lot of years of me throwing stuff at the wall, but previously there wasn't a lot going on. I mean, I might have gotten a few views, but nobody was really resonating. And when I started covering fraud, just the impact it had for the victims of these scams was just so incredible to me. And even sometimes it would lead to actual like real life actions happening. Like for example, recently, one of the guys I covered, he had a $2.6 million fine from the FTC. And I covered a guy before this is a Bitcoin thing, who he ended up getting arrested. So I just had this like click moment where I realized not that many people are covering this. There's sort of a unique sector of the internet where this fraud is going kind of unexposed. And then I got into it first in the get rich quick space and then in the crypto space. And so, yeah, I've been covering specifically the like get rich quick stuff and fraud stuff for maybe like 3 years or so, but that's a brief bio of who I am.
Do you think more people are being conned today, or maybe that, I don't know, one, more people in general, and also maybe younger people are being conned more today than they were in previous times? Is that something that you think is true?
I don't know. It's really hard to kind of get numbers on this of fraud. It certainly feels that way viscerally. It just like feels like it is, whether that's because it's easier to find those frauds and that it's happening now on social media rather than maybe before it was like a call-in TV program where it was like, hey, call in and you'll get all this money. You couldn't see the number of views that had. People couldn't come out with their own testimonials about it if it didn't work out for them. So there have been grifters, as long as anyone has been keeping records, who've been promising you, kind of the thing you want, whether it's wealth, health, or happiness for no work. I mean, it is the most attractive sales pitch. So it's kind of hard to say, but certainly one thing that's maybe supercharging this fraud problem is the increasing lack of confidence in the so-called American dream, where you felt like you could sort of pay your dues in an honest way and expect that your life would be good for that. I think a lot of people, for better or worse, true or not, are becoming disenchanted with this notion that all you'd have to do is get a job with some company that's going to take care of you for the rest of your life.
Totally. I was actually going to reveal that that was one of my biases, that I do think that this casino finance culture that has grown up, or that I've called it financial nihilism, and we've seen it in some of the more traditional spaces with, companies like GameStop. And of course, crypto has enabled it, I believe, in ways that wouldn't have been possible otherwise, because you can have all of these unregulated, what are effectively unregulated IPOs, and people are able to consistently generate excitement around monetizable storylines, monetizable through tokens or cryptocurrencies, et cetera. And I've noticed that a number of your frauds are related to that, where celebrities are used in some cases to pump particular tokens or coins or projects or something.
Trust is a huge part of any kind of scam. And in the past, there's a lot of ways to build trust. One way used to be like the long form sales letter, where you would just write this really long piece of copy where you're trying to establish a ton of credibility. But obviously you can imagine the attraction of, hey, if you feel like an influencer, we don't have to do some long form sales copy. We can just get right to the point, right? We can just pitch this coin to you because you already feel like Logan Paul or Floyd Mayweather or like any number of, kind of Kim Kardashian, whoever it might be. You already feel like you know them, so they don't have to do all that. So they just get paid $500,000 or whatever they get paid, and the coin gets maybe double that or triple that in actual sales.
Yeah, I love that you brought up trust, because trust figures prominently in the story that we're going to talk about today, not just on a meta level, not just as it relates to cryptocurrencies and the sort of foundational role of trust and how we think about the purpose of crypto, but also because trust and the lack of it in some of these centralized exchanges and lending platforms that are at the heart of the current crisis is what is driving the risk of contagion and the risk of further market failures that we're seeing play out now in real time with Genesis and its parent company, DCG. So let's actually use this opportunity to get into that conversation, because this is what brought us in touch. It's a topic that you've covered on your show. You've covered FTX, Celsius, Three Arrows, Luna, and you recently put out a great show on Genesis that you recorded right before the company announced that they would be suspending redemptions. What I would like to do is to give people a recap of what's happened, and then I want to bring them up to date on where things are today. We're recording this on Friday, November 25th. And then I want to talk about what might happen based on your investigative reporting, not just for Genesis, but for the space itself.
Yeah. So do you want to start with the recap? I can kind of give a brief
Sure.
overview of what's been going on. So if you've watched Demetri's last two podcasts, or if you haven't, here's a brief summary. Basically, FTX is a crypto exchange that grew massively in popularity in 2020 and 2021, as well as 2022, is run by this guy, Sam Bankman-Fried, who also was the founder of Alameda Research, which is like a trading firm. All you really have to know is that Sam was seen by a lot of people as being super smart. Everyone thought him and his team had a ton of alpha out there in the Bahamas where they were based. And he was seen as sort of like the guy who was kind of at the top of crypto. He was talking to all the regulators. Well, actually, while talking to one of the regulators, he kind of got in a spat with a competitor at Binance, this guy who goes by CZ on Twitter. He runs Binance. And this guy suggested that maybe Alameda is not so solvent after all, based on a CoinDesk report that came out with their token allotments, which basically showed that instead of being super strong and holding billions of dollars like they should in stable coins or in some kind of like Bitcoin or Ethereum, they had a lot of kind of what is called shit coins in the crypto world. And this caused a bank run. And subsequently, although they said everything was fine, they ended up not being able to redeem deposits. They shut down, declared bankruptcy. The big stuff now is that this bankruptcy has revealed much deeper holes than we thought previously. The guy who was in charge of Enron, the Enron bankruptcy, like dismantling it, has now taken over the FTX bankruptcy. And he says it's worse than Enron in terms of like corporate complicated financial fraud. I think his quote is the failure of corporate controls. Basically, everything was being run on napkins here. Nothing was written down. In part of the bankruptcy document, like this kind of stunned me. He says, "We are writing things down," as if that's some novel idea for a corporation to do. But his point there was that FTX wasn't writing things down. Alameda wasn't writing things down. In fact, Sam Bankman-Fried was using deleting text messages in order to talk to his employees and encouraging his employees to do the same. They were using expense reports were being done through emojis on like a Slack channel. It was ridiculous. It's completely insane for $1 billion company to be doing this. And now it's coming out that a lot of these people were not that qualified after all. They were all in polyamorous relationships out there in the Bahamas. It's looking much more like a shit show than we ever thought before, pardon my language. But yeah, that's kind of a brief summary of what's been going on. And now there's a much deeper concern of, okay, well, not only is this incredibly impactful for I think they have $10 billion of liabilities that they don't have money for. Not only is that a problem, but now there's a deeper contagion going on in the crypto markets. Alameda, as I said, they were seen as the big players. They were the big sharks. They were the people that everyone was loaning to. So earlier this year, we already had a huge hedge fund, Three Arrows Capital, blow up, which I'm sure we're going to get to. But Alameda were sort of the guys that were smarter than Three Arrows. They didn't blow up because they weren't like, they're kind of the smart version of Three Arrows Capital. They were the people that were seen as they weren't going to go under by the big players in this space. So when they did, now there's this deep contagion because all these lenders who had lent them money are now basically out that money as well. They have huge holes in their balance sheet. And now it's kind of this question of who's next? Who's the next person to go bankrupt?
So what was the relationship between Alameda and some of these other hedge funds and companies that blew up back in the summer of 2022?
Yeah, so
because that brings us up to date with why Alameda blew up, right? Mm-hmm. I mean, that's sort
and
of the
FTX.
Working assumption, right? Alameda and FTX. Yeah. Basically the Sam Bankman-Fried empire.
Correct. Yeah, they were actually sharing a lot of funds. He was using customer funds to kind of trade degenerately.
And also when customers were sending funds, we've since learned this. And again, there's just so much information here that's come out. But when customers were sending funds to FTX, they were actually found out sending funds initially to Alameda, which was then transferring them to FTX.
It was a complete mess. I agree with the Enron bankruptcy lawyer, like complete failure of corporate controls. There was just nothing. And I see that as evidence of fraud because his parents, Sam Bankman-Fried's parents, are compliance lawyers. I mean, this guy does not come from nowhere.
Yeah, so a couple of things. Also, I just want to emphasize something you said earlier, which is like the disappearing text messages. There's no innocent explanation for that. It's not a thing where like, oh, they should have known better. They explicitly did that. They didn't want to have a record. It isn't something where they said, whoops, we forgot to keep the records. They went out of their way not to have records on purpose because they felt, for whatever reason, that it would be disadvantageous to them to have records, which tells you a lot. In terms of their parents, this is something we could talk about as well, maybe after we kind of go back and establish what the daisy chain is between FTX and some of these other hedge funds, which is what do we know about his parents' involvement? I mean, as more and more information comes out, what we've discovered is that they were increasingly involved. They had financial interest in the Bahamas. Sam Bankman-Fried's father was directly involved in giving money on behalf of FTX to nonprofit organizations, which were used as part of this political influence campaign to get Democrats on board. His mother is also involved. I just read a story from Vox recently. She's part of at least one political action campaign or organization that was also supporting Democrats. I think it was called Mind the Gap. I think that was the name of it. So again, there's so much. One of the challenges of doing this responsibly is there's so much information. So, and it's all coming out now, so we can only kind of cover what each of us knows, but feel free to address that however you like or whenever you like. And let's also kind of give people a sense of what the chain of events here is and how we got to where we are right now.
Yeah, let me start with this relationship between Alameda and these other lenders, right? Because I think that's a really important point to understand how this contagion might be happening, why other crypto exchanges might be blowing up. Not so much as a result of fraud, like they weren't committing fraud. They just may have had really lenient lending standards. So first, to understand the crypto lending space, you have to understand the ecosystem surrounding it. So if you're in crypto, right, you can deposit to certain lenders. You can give them Bitcoin, Ethereum, Dogecoin, in a lot of different currencies, and they will offer you a yield based on that. Let's say you give them Bitcoin. They might offer you 5 to 8%. But how are they getting that yield? Well, they would go rehypothecate that and go send that to someone else, loan it out again for a higher rate. So they would take from retail, take a bunch of Bitcoin, pull it up, then go give it to these institutional traders who are hopefully making a profit with that. And they would make money on that spread. And then the first lender, the money, would make money, the person in retail. So that's like sort of the idea. Now, the problem is there's so much money being poured into these lending institutions that they have to make these crypto coins productive, right? They have to lend it out to somebody. So a huge problem started emerging when you had things like Three Arrows Capital blow up. People realized, well, who do we give money to? Three Arrows Capital was another big player in the space. They were taking huge loans. We'll talk about them in a second, but they got a $2 billion loan from Genesis, just partially collateralized, not even fully collateralized.
And wasn't it also collateralized with shares of GBTC?
Yeah, well, let's get into that in a second, because that's going to send us down a total rabbit hole. But basically, we found out that these lenders were sort of lending irresponsibly large amounts of money to so-called like approved institutions, and there were only so many. One of the biggest was Alameda Research themselves. They had an insatiable appetite for giant loans. And come to find out, one of the ways they were actually like getting this money, what they were paying for collateral, they were using what's called an FTT token. Now, FTT token is their FTX native cryptocurrency. I think they had like plans for it one day, but in truth, it was irrevocably tied to the success of FTX itself. Therefore, if FTX is in trouble and your loan is now in trouble, it's a terrible form of collateral because FTT would lower in value the second FTX is suddenly not paying back their loans, right? So we now find out that they were giving huge amounts of FTT to these lenders, and these lenders were ostensibly giving them huge loans. We know BlockFi this happened to, right? BlockFi is now going bankrupt, or it seems like they'll be declaring bankruptcy soon because of their connection to FTX. This is actually one of the reasons it's speculated that FTX in the summer, they bailed out BlockFi. BlockFi was going to go bankrupt. They had huge loans out to FTX. It's speculated that one of the reasons they bailed them out in the first place was to prevent these loans from being called. The same thing is true with, it's also been speculated about Voyager. There's another one as well, I think Celsius as well. There's basically Alameda had ties to almost every major lender, and they were taking out huge loans from these guys to try to get more and more liquidity. So they were pretty leveraged up. And now as a result, now that these loans are basically worthless and the collateral, the FTT tokens are basically worthless, there's huge questions of the solvency of these various lending institutions. Some of them are just saying, hey, we're just pausing withdrawals. Some of them are saying, hey, we're fine until we're not. It's a real problem. But that's the relationship, and that's kind of why things are falling apart.
Yeah, so FTX absorbed the unrealized losses that were occurring at some of these counterparties in the summer, the working thesis goes, and that those unrealized losses were the source, ultimately the source of what became a solvency crisis for FTX and Alameda and the entire SBF empire in the last several weeks.
Yeah, we should be clear. This is the biggest question mark in the whole FTX Alameda kind of storyline right now is how they first lost the huge amount of money, because we know at some point they were using customer funds to kind of plug the hole Alameda had. So we know at one point Alameda had money. Somehow they lost it. That's the big question mark. We think it has something to do with Three Arrows Capital or Luna. And then they plugged the hole. And somehow it seems like they lost a lot of that money too, a lot of their customers' money as well, which we can kind of speculate on that as well. But now they're left with a bunch of essentially shit coins like FTT, which is now, since it's so tied to them, is worthless.
One of the other things that Vance Spencer mentioned from Framework Capital, I had Vance and Michael Anderson on for my second to last episode, the one before my episode with Marshall Kozlov. One of the things he said, which went unremarked upon, because he had said so many things, they had said so many things, and I think I failed to have a further discussion about it, but it was something that he said about Sam Bankman-Fried possibly not burning some of the FTT tokens that he was supposed to burn as part of the yield farming that was going on his platform. And that maybe, in fact, that's where some of the money went, that he actually pocketed some of the money that he said that he wasn't going to actually spend. Now, whether or not he converted that FTT to anything else in the process, I don't know. But again, this brings us back to the fact that there's such a shit show on the books here, and God knows what these guys are looking at, which also kind of raises another question. that I want to ask you, Stephen, which has to do with where the Bahamas and jurisdiction and all of that stuff fits into this story. Because it's not clear, like I've heard there's been suggestions that maybe the government of the Bahamas has somehow withdrawn some money before, once the bankruptcy had already been filed. I mean, like, I'm just curious, what do we know about that?
Right. There's a jurisdictional fight between the US and the Bahamas right now of kind of who gets to oversee the bankruptcy. Some of this is confusing, but it does look like the Bahamas ordered the liquidation first. They were like the first to the show, and they had told FTX to set aside some of this money. Originally, people tied this to the hack. So they thought people were trying to connect that maybe the Bahamas liquidator was actually like equal to the hack. That is actually not the case. But it does look like some money was set aside, and the Bahamas, like whoever's running the bankruptcy over there, controls it right now. And there's a big question of, can the US claw back that money? And will the Bahamas allow that? So there's kind of a legal fight right now over that, which wouldn't be that interesting other than SBF himself, Sam Bankman-Fried, wants the Bahamas to get control. And that's really weird. He mentioned in text messages to, I think it was the Vox reporter, Kelsey, I'm blanking on her last name, great reporter. She released some text messages, and he remarks that he's hoping for a win in the Delaware jurisdiction. In other words, he's hoping that they lose. Like Delaware loses and the Bahamas win. So there's a big question mark of like, why does Sam Bankman-Fried care who wins? What would be the difference in the end for people in the US, creditors? I'm not sure. I think if the Bahamas get control, they would probably give preferential treatment to people in the Bahamas, which interestingly, Sam Bankman-Fried and a lot of his goons kind of are there. So the question is, are they trying to get money off platform? I don't know. You could kind of speculate endlessly on that, but there is a jurisdictional fight over this. It's not clear. I think the US probably will win, but it's unknown.
What do we know about the relationship between FTX, Alameda, Sam Bankman-Fried, and the folks over at Bitfinex Tether? Because one of the things that has come out in the days since I put out my last episode on this is that Deltec, the bank that I believe manages all of Tether's quote reserves, shares the same chairman with an FDIC insured bank called Moonstone, which previously went by the name Farmington State Bank, a bank with 3 employees and a net worth under $6 million based out of Washington State, that Alameda, or FTX, one of the two entities, purchased a small stake in 11% or something, or maybe it was a bigger stake. But whatever stake it was double the value of the bank at that time, or the net assets that they had. I can't remember. But it looks incredibly suspicious. I mean, first of all, Tether itself and Bitfinex itself and that whole organization is so incredibly suspicious, and it has been for the longest time. And you just have to listen to one interview that those people have done among a number just to know that there's so much shady stuff going on. But what is increasingly coming to light here is that there are a lot of connections between these two organizations. And I just wonder if, as time goes on, what we're going to discover is that this is part of a much larger conspiracy and to defraud investors and God knows what else. And I don't know exactly how the Bahamian government is involved, but I'm just curious, what have you seen so far? And do you have a kind of working theory on where this may end up taking us?
Yeah, let me try to frame this real quick. Because why does Farmington Bank matter? It's this small bank in the US. I think it was the 48th smallest bank. It's actually known for how small it is. And now it's being talked about all of a sudden. Why does it matter? I think it's important to say that what is interesting about FTX and Alameda is how much smoke there was before there was a fire. There was a lot of kind of red flags going on that a lot of people ignored. And now everyone's digging into their financials. And a lot of the conversation is around, well, is this fraud? When did the fraud start? A lot of the people in the mainstream media are trying to say, well, maybe this is just negligence, which I categorically disagree with. But it goes back to something you said about the deleted text messages. That implies fraud. When we're talking about this Farmington Bank, there's so many red flags around it that although we still don't have the full story on it, I think it gives the viewer, the listener, kind of a better understanding of how many shady things were going on at FTX and Alameda at the time.
Also, I didn't mention Noah Perlman, who was the chief compliance officer at Gemini, who's since become the chief operating officer, is on the board of directors of this bank.
Correct.
And there are further connections between FTX and Bitfinex Tether, including their chief legal and Bitfinex's chief compliance officer, which is also, it's fascinating. I mean, FTX's chief compliance officer. It's fascinating when you actually look at the story. So many of the people involved are actually in the compliance department, which is not actually.
Isn't that funny?
Yeah.
Isn't that funny? The chief compliance officer, chief regulatory officer seems to be trying to get exactly around the regulations. It's like the opposite.
Yeah.
Yeah, it's a very strange thing. So Farmington Bank is just notable because basically it's shown on the bankruptcy filings that they put in, I think, $11 million into this small bank. As you said, it had net assets of like $5 million at the time, or it was like valued at $5 million. But I don't think they even got 100% of the bank for that. They got, I think I saw somewhere that they got like a 10% stake
Right, exactly.
in the bank.
That's what I recall as well.
2 times the actual net assets. So why in the world would you do that? There's a huge question of like, who in their right mind would spend that money? So then you look at who's involved. And as you said, the guy who's also tied to Deltec Bank, which is one of the world's shadiest banks in the world, and like you said, inextricably tied to Tether, who everyone has questions about, is there as well. So there's a question of, is this some way of trying to move the money from the Bahamas into the US? Is this some kind of like channel for them to get money in? It's unknown. I mean, like at this point, it's still unknown. But as you said, there's like sort of a lot of people on the board that would suggest they're like in these regulatory roles. They tend to be the opposite of regulators. So I think I want to talk real quick about like, because you asked about the ties between Tether and FTX. I think we should talk about Dan Friedberg for a second. Mm-hmm. So Dan Friedberg is someone who's come under a lot of scrutiny recently. He is the chief regulatory officer for FTX, or he was, or Alameda. And why he's interesting is that his former job was as the counsel for UltimateBet. Now, UltimateBet is a poker site which basically defrauded its customers because they had a software glitch, or that wasn't a glitch, it was programmed into the code called God mode, where the person who had it on and active could see the other player's hands and bet against them. The person at the top, Russ Hamilton, he's the former owner of UltimateBet. He used it and ended up making, I want to say, in the tens of millions of dollars with this thing. He's on a recorded call with Dan Friedberg, and Dan Friedberg is conspiring to try to hide this from the public. He's on a leaked call right now on YouTube saying, we should blame it on a third-party contractor. We should say that, like, we didn't know and they hacked our software thing. So this is the guy they hired to be chief of regulation, a guy who's literally conspiring to get his boss out of what appears to be fraud. I should be clear that the guy was never charged formally. He was investigated. The investigation council found that he had cheated basically tens of millions of dollars. He was never charged with a crime. That's important to note. But this guy's conspiring to hide this fraud. So this is the guy they hire. And it looks like FTX was also committing fraud themselves. So who do they hire? They hire this guy. Also of note is they had their CTO, Gary Wang. He programmed in a back door into FTX's software where the Alameda people could basically take money from FTX without triggering any kind of red flag inside of FTX. So as we kind of talk, I think the wider framing, as I said, goes back to, was this fraud? Definitely. They, from the beginning, programmed in mechanisms into their own software to cheat in the same way that this God mode at UltimateBet was a way to cheat and Dan Friedberg was trying to get him out of it. My contention is this backend was basically a way to cheat. And, you know, I don't know if we have evidence that Dan Friedberg explicitly was conspiring to get him out of it. I would just say it's interesting that that's the guy you would hire to be your chief regulatory officer.
Didn't Dan Friedberg work under Stuart Hogner at Excappa, the parent company of UltimateBet?
Yeah, so Stu Hogner is now counsel for Tether, and he formerly worked at Excappa. I as you said, the parent company of Ultimate Bet. I'm not sure if he directly was the boss. I'm actually not sure about that.
But
I'm
he
sure
was definitely above him in the hierarchy.
Yeah. Oh, yeah. Yeah. Definitely above him in their hierarchy.
Yeah. So let's talk about what else do we know about Gary Wang? Because he hasn't come up at all, pretty much. Obviously, in my conversation, which I know you heard with Mark Gahotis, Mark brought him up. Obviously, super suspicious that he's just kind of absent from so much of the conversation and that his profile picture is him facing a bunch of computer monitors. But like, honestly, that's the least sketchy thing about all of this story. So what do we know about this guy? You know, Mark made some allegations that he was a CCP or something like that. I don't entirely know what he meant by that, but I interpreted it to mean he is a kind of go-between, really rich Chinese. This was me really reading into what he said based on also my own information. As a go-between rich Chinese people trying to get their money out of China to evade capital controls and U.S. regulators or U.S. financial institutions in the West, et cetera. Basically, that he was facilitating some kind of money laundering operation. What do we know about this guy thus far, and why have we not heard anything else when we've actually heard a lot more about some of these other characters? Is it that maybe there's no there really?
Yeah, I think it's remarkable that we know nothing. I think that is the biggest thing. I'll say
the dog
I tried
that
to look
didn't
into
bark
some
in the
of
night.
Mark's. Yeah, I heard the same thing from Mark. I tried to look into some of these things. There's not a lot of anything online you can find necessarily proving this. I think Mark is smart I have a lot of respect for what Mark does. I think he's very smart to note that basically the number 2 is completely absent during this whole thing. And we have no idea what he did, except that he allegedly built the back door. I think it's also worth kind of noting that almost a lot of people in FTX were sort of unknowns. I mean, they became known through FTX and Alameda, but they had no prior track record that you could look to say, hey, this person's reliable. He's got a real respected background. And we know that if anything shady was going on, he could basically be leaned upon to say something. There was just sort of none of that. It was a bunch of unknowns, a bunch of Sam's friends. And I think it's a huge indictment of everybody who so-called fact-checked this organization. People like BlackRock, people like Sequoia, who are salivating over this guy's bona fides. But when you actually look into them, what were those bona fides? What actually did he do before FTX and Alameda? Who can verify that he was actually some super genius? When literally his number 2, we know nothing about him. I think Marco has noticed there's literally one picture of this guy in existence, and we're supposed to believe he's a billionaire. How is this possible? It's just completely crazy. I mean, to go to a level further, like projects have done like the fake founders before. I'm not saying Gary Wang was fake, but like you would think that in a space where people have, invented fake identities, they put up stock photos saying it's a CEO, the CEO doesn't exist. You would think these firms that are doing so much due diligence would demand meetings with these people that are in charge of so much capital, in charge of all these, like basically making regulation. They were the number 1 pushers of regulation in Washington. How did we not see this coming beforehand? I'll say some people saw it coming, but they were basically ignored by the media.
Okay, so many questions. Well, why do you think that is? Because so much of this stuff was obvious. And I think you and I both know it's not because lots of people didn't see it. They did see it. So the question is, why did they continue to entrust their money with these people?
Yeah, it's a good question. I don't know. I think I disagree slightly. I think a lot of people were genuinely fooled. I don't think a lot of people who put their money with him knew in their heart of hearts that he was defrauding people. I think they maybe had some unanswered questions and decided to defer to the expertise of other people who have so-called background checked.
Yeah, let me restate that. As someone who has, kind of just limited experience surfing the backwash of crypto,
which is Twitter.
Yeah. There is so many shady characters with so many shady backgrounds in this space. So I think that in order to invest in it, so oftentimes you just have to oftentimes just accept certain things that you maybe wouldn't otherwise accept. And so I think that when, lots of people have seen executives from Twitter go on CNBC or other podcasts and not answer questions, like be very, very occlusive. So I just think my point is that I just feel like this is part of the culture. This is kind of what you have to put up with to do business in the space, and it just becomes embedded in the set of expectations that investors have. And this is why they're willing to overlook it, because it's kind of like, listen, we're early days. There are tons of criminals and other shady characters that are in and out of the space. Any space like this, dealing with money, where it's unregulated, you're going to get a lot of those seedy people. Yeah, there's, since its founding days, Silk Road, drug trafficking, money laundering, etc. You just have to kind of do your best to weed it out and just sort of put your faith that it'll in the right people, and you can kind of make your way through the industry. I feel like that's kind of what I'm getting at, which is why that's what I think is the reason ultimately, because we know that there are so many shady characters in this space.
Yeah, again, I'm going to have to just totally disagree. I mean, yes, you're absolutely right. There are expectations around that. But those people who are just accepting that are not the Sequoias and Blackstones. Like, these people do research. Gary Gensler loved Sam Bankman-Fried. He has been very critical of a lot of the characters in crypto. I think there was a unique blind spot, is what I'm saying. You're saying there's a blind spot in general.
Yeah.
I think there was a unique blind spot with Sam Bankman-Fried, which is so alarming on the one hand and also worth exploring. And I think a lot of it comes from he knew the right way to talk to these guys. He came in, he was a huge acknowledger of a lot of the failures of crypto. He would often talk about like people running projects wrong, scams being in the industry. He would talk about how we need to clean up the space, how we need regulation. He was kind of saying all the right things to get people to buy into the idea that this guy's different. He worked on Jane Street, so he has a little bit of experience that maybe someone could point to and be like, all right, he's just not completely from nowhere. So I think that was a lot of it. Like, he says in a text message that we woke Westerners use the right shibboleths, the right sayings to get everyone to believe in us. So he was very actively cognizant of the fact that he was building a archetype for people to believe in.
Absolutely.
Some story of Sam Bankman-Fried. And that story was not your average crypto guy. It was not your average crypto founder. It was a story of the next Zuckerberg. He sort of was the guy who comes in, he goes, hey, look, all of this is the dot-com bubble, but I'm going to be Zuckerberg. I'm going to be Bezos in this space, because everyone looks at it and they go, okay, it's early technology. There's got to be something here, some winner. But who is that winner? We're looking for somebody who's smart, who's capable, who has some experience, who's not looking for short-term profits. This guy was going around and checking a lot of the boxes. Come to find out, there just were these associated red flags, like him talking about DeFi like it's one big Ponzi scheme, and Matt Levine saying like, oh, it sounds like you're in the Ponzi business and business is good.
It's good.
And he seems like he has no answer to that. There's all these associated red flags, but I don't like the idea that, in hindsight, it's easy to be like, oh, it's so obvious. It's worth saying that he had so many people fooled that were not fooled by all the other kind of crypto types.
Sure, yeah. But a couple points. First of all, I think the reason why such an obvious red flag as the episode with the odd lots wasn't a red flag is because the entire way that you bootstrap a project in crypto is to pump the token. It's to generate massive interest. It's to fake it till you make it. It's to get the market cap high enough where you actually you create the ecosystem. I mean, it's the ultimate fake it till you make it. And that's particularly true in protocols where you need to have large market caps in order to secure the actual underlying protocol. I also want to mention that with Kevin O'Leary was asked about this. What would you do if Sam Bankman-Fried came to you today and said, look, I effed up. Will you give me a second chance? And he goes, that's a great question. And the cynicism was right there on display. It was very clear that there was nothing, unless Kevin O'Leary was basically entirely justifying to himself why he missed it in that moment, which is actually possible. There's also the other alternative explanation, which is that the guy's cynical. And for him, a person who is a criminal, a person who's done these types of horrible things, is not necessarily someone that you should invest in. In fact, maybe exactly because of that, you want to invest in him, just like some people invested in Bernie Madoff, exactly because they believed that he was doing something that was illegal. They thought that he had some kind of inside information, which is why they were invested with him. They just thought that they were on the inside, that they weren't on the outside of this con. right? And so I think that this is what has happened in crypto. It's become increasingly compromised. I've called the space since after 2020 uninvestable because it became just this frenzied speculative mania characterized by what I've called financial nihilism, which we could also call this casino economy, the casinification of finance. And so that's kind of what I mean, when I say that. I also want to feel free to respond to that. And then I want to ask you a different question if you have anything to say, Stephen.
I actually think you made a great point. I do think there are people who probably, there is some level of sometimes when you see something shady, some people's reaction will be, well, if he's smart enough and powerful enough, this is an investable thesis, as long as he doesn't screw me over. Like he can screw someone else over, but as long as I'm not the last guy holding the bag, I don't care. I think you just made a great point. I think that was a great summary. Yeah.
So let's talk about why Sam Bankman-Fried is had just had Thanksgiving with his parents in their Bahamanian mansion. All right. Their 9-figure estate. And he's going to either be flying to New York, which I guess he's probably not going to be because he would get arrested, I assume. I don't know. Either flying to New York on Wednesday to participate in the New York Times Deal Book Summit for a nice little fireside chat with Andrew Ross Sorkin, or he's going to do it over Zoom. Why is this guy not in jail right now?
Yeah, you're going to get me heated on this. This is one of the most frustrating parts of this whole story is that the fraud is so clear, and yet there's seemingly no consequences to any of this, and there certainly haven't been yet. And yeah, you're right. He's flying out. He's getting wooed by all these reporters who, frankly, have been like one way to look at this. The most charitable way to look at the New York Times thing, right, is that they're going to hold him to account. Finally, it's the chance to do a great, hard-hitting interview. But if you do look at a lot of the stories that have been written so far by a lot of these outlets, it's been terrible. It's the good, bad, and ugly of journalism recently. And most of it is bad or ugly. It's actually insane. They did a story about how, Sam's getting sleep. He thought he wouldn't get sleep, but he's actually getting sleep. They did another story where they wondered, was the problem with FTX that is it the regulator's fault or the venture capitalists' fault? But what about the third option, which is it's Sam Bankman-Fried's fault, right? It's not necessarily the fault of the regulator or the venture capitalist that somebody stole money. So this is sort of the problem, is that because of the huge blind spot that we've witnessed in the media, things like this Deal Book Summit, it's so easy to get super cynical about because, it just looks like because of the massive amount of funding he did to various journalism projects, various philanthropic efforts, people have been blindsided or bought out by that to now give him the most charitable view of everything, when the obvious answer is he just stole the money and he's a fraud. But they are bending over backwards to try to interpret every single one of his actions as kind of well-intentioned but going wrong. I saw another article, I think it was like how Sam Bankman-Fried's plan to save the world burned down or something like that. Like even the framing of that, his plan to save the world, it just sounds like, you were going to save the world, then it messed up. And it's like, no. You stole money and then it blew up. That's the real framing of it.
Yeah.
So it's the media's framing of this has been atrocious. I do want to say real quick that there have been really good reporters who've been doing great work on this in the mainstream media and in independent media. And there's been bad reporting from independent media as well. But the main swath of bad reporting, specifically in the framing issue of just like framing him as maybe not such a bad guy, has been on the side of the mainstream media. Whereas the independent media is more likely to speculate on conspiracy theories, like with more of like they can be inaccurate at times. But that to me is like, okay, you can figure that stuff out in the long term. The bigger problem to me is like the laundering of this guy's reputation as if he didn't just commit one of the biggest frauds of the 21st century.
So look, man, we did an episode, I don't know if I mentioned this during our recording yet, but we did an episode 2 years ago with Tom Burgess on the international kleptocracy, the international illicit money trade, money laundering, all that stuff. And one of the things that I learned in the course of that conversation and reading his book is just how important it is to launder one's reputation. That so many of these individuals that gain their money in the illicit, in the underworld, and this is a huge source of liquidity also for financial markets. So many of these folks need access to the legitimate world. And so the only way that they're going to do that is by spending a lot of the money that they gained illegitimately to gain legitimacy. And I see so much of that here in this story. I also see so many things that remind me from the very beginning. And I'm pretty sure I mentioned this in my conversation with Mark or with the Framework guys or both of them, because this guy's a composite character to me. I see the Bernie Madoff, I see the Elizabeth Holmes with the carefully curated exterior, I see the John Corzine with the rating customer accounts, and I see the Jeffrey Epstein. And it's not just because we're dealing with a Caribbean island here, and not just because we're dealing with this, like, what are they called? A polycule, the sex cult that they're part of, where it's like what David Portnoy called it, a bunch of nerds effing each other. I love that. I love David Portnoy's quote. Sometimes you just need David Portnoy in there, just like the right spice. But like also something that has caught me by surprise, which is I was expecting that what we would have to be dealing here in terms of the framing, like you described, was not actually a problem of SBF not being held accountable or being culpable or being properly demonized. My expectation was that he would be completely demonized, that everyone would be like, there's nothing else to see. This guy did everything. He's evil. He's an evil genius. Nothing else to see here. Wrap it up, punish him, whatever else. And that's not what's happened. And so it makes me wonder. It makes me put my little tinfoil hat on and start to think about, there are a lot of areas where we can go with my tinfoil hat, and I don't usually put it on, but I'm going to put it on. I'm going to put it on here, or maybe I'll put it on the other half of this conversation, Stephen. But I think that at the very least, he's compromised so many people that so many people are backpedaling, trying to figure out like what their involvement is in this guy's empire. And that's kind of where we find ourselves today. I want to give you the last word here, Stephen, and then I'm going to move us onto the premium feed for the second hour, where we can get into some of those theories, as well as the further risk of contagion and how far it might go and how many participants may be affected before it's all over. But I'm curious, what are your thoughts before we do that, and specifically about that last point I made about the narrative and why he hasn't been scapegoated?
It's a great point that I think a lot of people feel themselves exposed to the problem of FTX, and the idea that maybe Sam was a smart guy, well-meaning guy who got in over his head is such a better narrative, because it points to the problem being not with their judgment or that they didn't see a fraud. It's a problem of regulation, right? And it feeds into something that we need anyways. Everyone agrees we need crypto regulation. Even crypto heads now are going, okay, finally, we will agree that we maybe need some. So that is the most convenient kind of fruit, low-hanging fruit to reach for is, well, it's just all the fault of regulators. Had we had regulators, this would have never happened. But that doesn't actually answer. That's not true in the case of he just stole money. So I think a lot of these people, like, I remember reading this piece by Sequoia, who it's now been deleted, but the person was saying, in all my years of journalism, it's like my brain has developed this algorithm to find great people with great ideas. And when I looked at Sam, I just knew. He was the world's first trillionaire. He was the real deal. So like, as that journalist, what do you do after that? Where do you go? You've just said my whole career led me up to this, and you put your rubber stamp of approval on maybe one of the biggest frauds. You're dying to find out that this guy is actually secretly just well-intentioned and he's fine. So I think that's a lot of it. And that leads them to some extent to just believe in the pathological lies that SBF keeps putting out, that he was well-intentioned, he's so sorry, he was so negligent, blah, blah, blah. Not that he's an actual fraud. I also think, before we go, you can't excuse the funding question. A lot of news outlets were literally funded by this guy. And I'm not even suggesting some conspiracy of like he told them not to say anything bad. You just can't take money from somebody and then report unbiasedly on them. Even trying to counteract your biases will lead to some like skewed result. You will never look at someone the same after they have funded your operation a huge amount. You personally, Demetri, wouldn't, as nice of a guy as I think you are, as much as I think you try to overcome your own biases, you would never be able to report on SBF if he had funded a year of your show, right? It would be impossible to look at this guy so negatively. So I think that's a lot of what you see going on here.
Yeah, I mean, I completely agree. And it's actually why I have never taken a sponsor or taken advertisers. One of the big reasons, because I always knew that on some level, it would bias me. It would put me in a difficult position, even just like on a moral level, right? Like it is hard, even if someone does something illegal, something that you know is bad, when you know that they did something good for you, it's kind of hard at the same time to turn around and be just as tough on them as you otherwise would be. So, I mean, I couldn't agree with you more. So as I said, Stephen, I do eventually want to talk about Contagion because that brings us also to the practical questions for investors in this space and sort of thinking through what's going to happen and where the weak points are in the crypto industry right now and in the markets. I did say I want to put on my tinfoil hat, and I think I actually want to say before we go to the other side that I don't even think that's a fair framing because I think at this point we're talking about a conspiracy here. So what we really want to understand is what do we know and what might be true? What's the difference between what we know and what we might be true? And let's put forward some possible hypotheses as to what those things might be because I'm working through some of them. And for me, the bankruptcy of FTX and everything that's coming out right now is shedding an enormous amount of light on the bigger story of Tether and Bitfinex and all of those people and a lot of the stuff that I've learned over the years about that organization that just wasn't available to me before. So I want to talk about all of that stuff in the second hour, Stephen. For anyone that's new to the program, Hidden Forces is listener supported. We don't accept advertisers or commercial sponsors. The entire show is funded from top to bottom by listeners like you. If you want access to the second part of today's conversation with Stephen, as well as the episode transcripts and intelligence reports, head over to hiddenforces.io and check out our episode library, where you can also become a premium subscriber today. Stephen, stick around, man. We're going to move the second hour of our conversation onto the premium feed.
Sounds great.
For more information about this week's episode, or if you want easy access to related programming, visit our website at hiddenforces.io and subscribe to our free email list. If you want access to full episodes, transcripts, and intelligence reports, which include additional notes, resources, links, and other material that will help you get the most out of each and every episode, check out our premium subscription, available through the Hidden Forces website at hiddenforces.io/subscribe. Today's episode was produced by me and edited by Stylianos Nicolaou. For more episodes, you can check out our website at hiddenforces.io. Join the conversation on Twitter at HiddenForcesPod or send me an email at info@hiddenforces.io. As always, thanks for listening. We'll see you next time.